All right. What is going on, everybody? Hope you're doing all right. Hope you enjoyed your weekend. Got a watch list here for you. Let me get through it so you can get on with the rest of your day. So I have 5 stocks that we're looking at here going into this week. And the first one that I'm looking at is Airbnb. You can see here, even on this hourly chart, Airbnb has been running up ever since really making its 2-month low on the hourly chart, just trucking along here. Okay, we're showing a little bit of good energy still. That squeeze just fired and it's pushing back up. I think we could see this one, just call it 180 retest. There is a light squeeze on the daily as well, so that's been holding the 8 EMA and running up really well here. So I do like Airbnb long, right? Even the weekly. Okay, so multiple charts showing a good long play with Airbnb. So a little low on the IVR, that's okay. Earnings not till November, so I'm okay with that. So coming into the monthly cycle here, I'm looking at a vertical spread, and I want to sell the 160 puts and buy those 155s right behind it. Ideally, you want to get $1.40 or better for it. Doing so at the current moment shows a 68% pop. That is not bad for a vertical spread here, gang, okay? And then, like I said, it's defined. So, good overall play here. Okay, and now the next one that I'm looking at is going to be FUBO, right? F-U-B-O. This one, I'm looking at a strangle, a pretty wide, semi-long skewed strangle here. And as you can see, we'll jump over here to the weekly chart. You can see that while it is squeezing, that upward momentum is kind of slowing down here. And by selling these, actually, I'm looking at the, let me see if that's right. Hold on a sec. Roughly, yeah, it's a little bit illiquid, so let me see here. Sorry, 1 second. Let me see where that lines it. That's what I was looking at. Okay, so I'm sorry about that. I'm looking at a more short skewed strangle. Okay, not long skewed. That upward momentum slowing down. You can see that on the weekly, which actually we're below the 50 moving average here. So I'm looking at selling right above current weekly resistance and then selling down here below current weekly support. Okay. And so what that's going to be is November, and it's a little illiquid, right? The stock itself is very liquid, but the options can be hard to get in, even though they're fairly tight on the spreads. The liquidity on actual options is not there. There is a lot of open interest, and take that one with a grain of salt. So if this can get filled, I'm looking into November, and I want to sell the 17.5. See it? Look, I had the wrong one again. Yeah, 17.5 is still fine. Slightly above support. I want to sell the 7.5 puts, and I want to sell the 37 calls. Okay, going to lean it about a delta and a half short with at least 2 contracts. If you add more contracts, obviously your deltas to the downside increase. It's right around an 80 pop here, guys. Right around an 80 pop. 90 cents. I'll even take 80. Okay, and it costs about $1,200. All right. The next one that I'm looking at is going to be Match, right? MTCH. Match also looks good here on the weekly chart, and you can see that had a good run up, and it consolidated for actually quite a while here. I mean, a long time, since January, really. But we got a good low squeeze with momentum picking up. You can see that we're light blue again here on the early entry bars, holding those moving averages stacked to the upside. So I think we can see 175 retest. We look at the daily. Daily is a little bit slower, but it is also stacked to the upside with a medium squeeze. And the hourly squeeze just fired. So I'm expecting this to push up here. We could break above 171 and hit these 174s. So by going out into November, gives a little bit of a time. Match is also a little illiquid, but if you can get a decent fill, it's a good play. So what I'm looking at is selling the 145 puts and buying those 140s. Ideally, I would like to get $1.30 or better. This will give a 65 pop, so my perfect odds here. And like I said, ride it up to those highs. All right, next one is going to be WOOF, right? This one, another one that's, excuse me, can be an issue getting into because of the liquidity, but I've traded it multiple times and it works out pretty good here. So what I want to do, excuse me, is lean this one long with a strangle. Okay, you can see I'm looking at below its all-time low, and then I'm looking at just getting right shy of its all-time high. Okay, it does have an early entry with a little bit of a negative squeeze. That's okay. We got a lot of support here to the downside. So with this one, November, I want to sell the 17.5 puts and those 30 calls. I would like to get at least 45 cents for it, doing at least 3 to 4 contracts. It's super cheap, 83 pop, leaving it 4 deltas long. You know, and if you do 3 contracts, that's $135 for only 600 bucks. But this is where you can see the liquidity is a little bit of an issue. So we'll see. It's kind of on the bottom of the list there. I just don't like that the bid-ask spread's so wide on these 30s, and I really don't want to go up to the 25s. So I'd be willing to accept a little bit wider spread here in order to get a decent pop. All right. And then lastly, gang, is going to be XLE. I want to take XLE long, right? That's the energy ETF. And you can see it's been doing pretty good. We had a couple of good moves recently. So I'm looking just shy of being down past the 200-day support level. But looking good. We got a good weekly squeeze with upward momentum coming in. The hourly is holding fairly good here. Okay. And so is the daily. I believe we can reach up here to 57s. So what I want to do on this one is I just want to sell straight naked put. Sell those 47 puts. Ideally, I would like to get at least 55 cents for this. That would give you about $1.10 with 2 contracts and only cost you 940 bucks while giving you an 84 pop and being $2 past that expected move, right? The 49s are actually even above the 200-day, so it looks good. Now, if you had to define it, 1, 2, 3, 4. So you can see a $5 wide is a little low. So 30, 60, 90, yeah. After $1 wide, it doesn't really show the greatest. Now, everything's definable, gang. So you can come in here with 2 contracts. That's not bad. It's just not 1/3 the width of the strikes. But it would give you a 67 pop. So selling those 51s right at that 21 moving average, also not a bad idea, okay? And that's it, you guys. That's all I got for you going into this coming week. So have a great rest of your weekend, and I hope one day to see you in chat. Take care.